Hey guys, so welcome back to the channel. Today I have a new trading strategy which I'm going to backtest for you over 100 trades. I will tell you about the indicators we're going to be using, show you a few examples, and then perform the 100 trade backtest. So this strategy involves only one trading indicator, and it's the rate of change. The rate of change measures how fast something is changing over a certain period of time. It is often used to talk about how fast something is moving, and it can be shown as a comparison between two changes. The rate of change can be seen on a graph as the steepness of a line, and it's often represented by the Greek letter delta. So guys, if you want to support this channel and get your hands on some exclusive backtested strategies, check out our Patreon page. We've also got a live chat on Discord where you can ask questions to the community, and the first 30 people who sign up for the middle tier will get full access to the top tier at no extra cost. That means that you can send me your own strategy for me to backtest, and I'll make a video like this one to show off the results. I've seen a few of you have already joined, and for that I'm super grateful. So please consider having a look at the first link in the description, and I can't wait to see you there. This backtest is based on the daily time frame on Euro USD. So here's the strategy. We go long when the 63 rate of change is positive and the 21 rate of change turns positive. And similarly, we go short when the 63 rate of change is negative and the 21 rate of change is negative as well. We place the stop loss at the last swing. We don't have a maximum number of trades that we can have at any given time, and we will have a fixed risk to reward ratio of 1 to 2. However, it will also be a trailing stop loss, which means that when the open profit reaches 1R, we move the stop loss by 1R in the direction of the trade. So let's get on the charts now so I can show you a few trades, and then we'll dive straight into the backtest. So here we are on the charts on Euro USD on the daily time frame. We'll go ahead and add the two rate of change lines. So we're going to click on it twice, and then basically what you want to do is on one of the two indicator windows, you'll click on the three dots and then go onto move to and click on existing pane above. So that will essentially merge the two windows into one. So we can go ahead and change the settings. So the first one is going to be 63. We'll keep the color to blue, and then we'll change the settings for the other one. We'll change the length to 21, and we'll change the color to, let's say, red. Also, what you want to do is change the color of the zero line. So I would suggest making it the same color so that you can easily distinguish them. We'll make it red as well. And so essentially, whenever both lines are positive, we'll go long, and whenever they are both negative, we'll go short. So if we zoom in a bit, right here, you've got both lines positive. The blue line is already positive. The long-term rate of change line is positive, and then the red line, which is the shorter term rate of change, becomes negative and then becomes positive again on this candle. So you would go long. Right here, you place the stop loss at the last swing and you're aiming for a 1 to 2. So this would have been a successful trade. Moving forward, again, you're looking for both line turning either positive or negative. So in this case, this would have been a long position after this red candle, which most probably would have been a loss because the last swing would probably be here. And then here, moving forward, they both become negative after this candle, after this red candle. So here you would go short, place the stop loss at the last swing, and this would probably be a break-even trade. Yep, break-even trade, which you would be stopped out here. So let's go ahead, perform the backtest, see how this performs over time, and I'll see you back for the results. So there you go, guys, the result of the strategy on Euro USD. We had a maximum drawdown of 35% while risking 5% per trade. With a variable risk to reward ratio, we had 26 wins, 44 losses, and 29 break-even trades, with a maximum of 5 wins in a row and 6 losses in a row. That gave us a win rate of 38% over 30 months, so a total profit of 180%. So if you would have started with $10,000, you would have ended up with almost $18,000. So I think this can be a profitable strategy. As you can see in the backtest over 30 months, it was indeed profitable. I think we can perhaps add another indicator to filter out the false signals and the noise, even on the daily time frame. So let me know in the comments, and I'll see you in the next video.